Again, remember I said that the 80 area kind of was picked up by the move up to 79. You could maybe make a case for trying it one more time, but keep your stop in place. Otherwise, if you're more risk averse, you're looking at the 88 area above. All right, quick rotation here. Obviously, they're hitting those stops. We had the 88 area, got right up to 6.25 there. Of course, of course, of course. My order was at 87. Again, if you're going to take it, just be a little bit careful now. We definitely told you not to take the 80 area for obvious reasons. Again, we are trading off of a very volatile week and also a number here that I think they were expecting it to be bad and came out good, just like they were expecting the CPI number to be really good, even though it wasn't too bad. But those expectations are making the market move, and that's what happens. I think they were expecting a bad consumer sentiment number, and they didn't get it, and then consequently, they're getting a little bit of rotation back up here again. We're way, way, way oversold. So, but what do I know? So be careful there at 88. Just like I said, kind of got up here to 6.25. Again, unfortunately, we're not going to be perfect, but it is what it is. If somebody did take the 86, if you scaled in differently, then that's fantastic. You did well. Again, if anybody has any questions, feel free to ask in the chat. It is Friday, and we are going to, uh, just take it a little bit easier here. We had a very busy week. We had some good opportunities. All right, coming back down here a little bit again. Be careful there if we go and retest that. Oh, we have 88, got right up there to 6.25 and came off. So be a little bit careful there. All right, there you have the levels again. Again, we are down. Don't forget on Monday. I appreciate you jumping in.
You got any special instructions?
Yeah, just
Don't lose.
Yeah, make money.
Make money.
Yeah, that's all.
Okay.
I mean, it's you know what, we'll see what happens over the weekend, but we'll see what they do today. They need a, well, I mean, I don't know if they need a little relief rally or not, but it's definitely under a lot of pressure. But go ahead.
I was gonna say you were gonna be back Tuesday.
Yeah. I think I'm gonna quit here a little early today because I just don't feel like I missed my 88. I had 87. I took the 53, but I got out way too soon because I didn't want the number to deal with the number. And then of course it's a low. Did you get in there or you were out?
No, I was going along in that mess. I was sitting in a drawdown and I looked up. Somebody came in the office and I looked up. I'm going, hey, this is a good spot to get out. I got out around that 84.
Oh, well, there you go. Yeah, tell that person to come to your office more often.
Yeah. I'm trying to figure out where I got a 92 at this morning. I was looking for a 92.
Well, I mean, I can see the 92 there. 92.
I was looking for it to go back to 92. But after that big drawdown, I was so happy with 84. I'm going to get me out. It's good enough.
Right. Yeah, no, that was very good. All right. I am going to, you take it easy. Have a good weekend. Too. I know you were leaving because you put the levels up. Everybody here, be a little bit careful today. It's Friday. It's triple witching, whatever that means. So getting its more volatility. And, but again, it's been a kind of crazy little week. So I think we've done okay this week. It's, today is, I don't know, I'm just not into it today.
I see our spread starting to come down a little bit now.
Well, it's supposed to, well, yeah. Oh yeah. It's not even, let's see here.
There's still 10 points.
Yeah.
10,
but
11.
There's like no trade in there.
Yeah.
Literally no trade in there. Yeah, I mean it's 10 points, but yeah, it is better than the 18. Yeah, you know what? They'll tie it down really tight.
Well, what I don't understand is does the new go to the old, or does the old come to the new?
No, the old comes to the new eventually.
Okay.
Yeah, it has to be because the new is now. and the old is just
So
they're
that
just
that 65 is going to have to come up to the 74 level.
right, as you can see, but it's not even trading. So
Yeah.
there's just a few people in there just kind of tightening their exit strategy. There's not even anybody that has a big number is out. Let's put
Yeah.
it that way. Right. If they're rolling over thousands of contracts to the new month, they're out. So they're not too worried
Yeah.
about that.
A question for you. When they roll over and say they've got big contracts and they're going to roll to the next month, do they actually have to get out of one contract and go into the new one?
Yeah, well, there's a spread trade. There's actually guys who actually do the spread for them, where they are if they're long, the SEP and they want to get long the DEES. There's a spread between the DEES to sell the SEP and to buy the DEES. There's a spread there, and there are spreaders. I mean, there's people who actually that's what they do. They just like get out of one contract and put it into the next month. And so there's a spread. There's a spread. People actually trade the spread.
Yeah, but there's no way if you're physically in one contract that it automatically rolls to the new one without
No,
physically getting out of one and
Right.
buying into the next one. Okay.
right.
Okay.
Right. And you always get the you get I don't know, you get the story of the grain trader who he had a one contract on and he went away on vacation and he went to Hawaii or something, and while he was there the contract expired, and when he came back he saw 5,000 bushels of soybeans on his front lawn.
Yeah, I've heard that one.
Because he didn't roll over his contract into the next month. So once it expires you have to pay for it, and that's what he ended. So he paid for it. Obviously he had enough money in his account to pay for it, so they go and dump the 5,000 beans and bushels of beans on his front lawn. That's a funny one. It's true, by the way.
That'd be a mess to clean up.
I would say so.
That's a pile of beans.
That's a pile of beans is right. Yeah. So yeah, no, you have to. I mean, anybody who's trading, size or, yeah, it's a true story there, Pat. It's happened. Just the infancy of this was obviously, you didn't have financial contracts, you didn't have equity contracts, you just had grains and soybeans and soy oil and the corn. You didn't have all these other contracts that emerged from in the futures market. So at the beginning, these guys, and think about the paper trail. You could easily, they were putting up the prices on chalkboards, literally chalkboards, nothing electronic. So you have to think, maybe somebody did forget that he had one contract on, and so that made that one story made sure that the firms also informed the person that they got. A lot of advancements happened since that day. Let's put it that way. So let's not. But it is a true story, though. So again, they didn't have crude oil either, right? I mean, you're talking about crude oil is only like what 15-year-old contract. You're talking about the infancy of futures trading way back, right? So crude oil is also a new one. All these new contracts that they put up. So by the time they had crude oil in there, and by the time they got bonds up there, and by the time they got it was a much more efficient. No, it won't happen now because your clearing firm is going to get on your ass and tell you, hey, you got to roll this over or else pay up. So they're going to want you to put up the money. 5,000 bushels of soybeans at I don't know what the price of soybeans is right now, but let's say it's $7 a bushel. you got to come up with $35,000 to pay for it. So they're going to need you to. They'll be knocking on your door, telling you, "Hey, you got to come up with 35 grand." And the guy's like, "Why?"
Plus freight.
Yeah, plus the freight, exactly. So once you figure that out, they'll say, well, get me out of it." you know. So, I mean, it happened actually. Speaking of crude oil, it did happen. Remember at one time the crude oil went down to negative,
Yeah.
that's because somebody had to get out of some idiot forgot that the crude oil was expiring, the contract was expiring, and he had to just sell it off because he didn't want the crude oil on his front lawn. That did happen, by the way, and that's why that market kind of was a weird 1 day move, like a 1 minute move, because somebody was actually getting out of his oil that he had, and he didn't know how to get out of it, so he just went to the market with it. And when you go to the market with it, and all these guys know that you're stuck, well, guess what they do? They just don't have any bids in there. They know you're stuck, so they're like, "Okay, here, come and get me. I'm a negative. You have to pay me to take your money." That's what they did. So it did happen with crude, and when they found out, and that's really that story. It wasn't too long ago.
I remember that.
Yeah, right.
I'm going, how do they get a negative number?
Right, exactly. That was not too long ago that happened too, and that was because somebody had to bail, and all these guys knew that he had to bail, and so they were putting the squeeze on him. They squeezed him. Anyway, it is what it is. But
well, a question for you: does the actual contract doesn't expire till the close of the day, right? The SEP contract
doesn't expire till today at 12 o'clock.
Yeah.
The
12 noon?
12 noon. Yeah.
12 noon. Okay.
Right. So
they have to clear out their positions by 12 noon. Theoretically.
Right.
Yeah.
Theoretically. Unless they're going to take, and there is the exchange does give you a list every day of the number of contracts that are outstanding that people have in their position as a position. And then when it comes to rollover, they have the number of contracts that are out there that are not covered that are going to be delivered. So, I mean, this is like, it technically 95% of the contracts are accounted for and people buy and sell, and it zeroes out. It's a zero-sum game. But the 5% that's out there are taking delivery. That's because they are, people who are in the business who are protecting their position in whatever contract they're taking, whether it be oil or soybeans or on market.
In the ES, it would be the basket traders.
Yeah, the ES, it's a little. Yeah, the ES, it's a little bit different. You would probably. Unless you have every contract in the ES, which most of these guys don't have.
Yeah,
they're just protecting. You're just going to protect yourself. They will roll over more than anything else. I really highly doubt that much of the equity contracts are ever delivered because they don't need to be.
Yeah,
and there are most of these guys who are these big firms who are using the market to protect their position. They're just going to roll it over. That's all they're going to do. They don't need to take the delivery of all those contracts.
Yeah, they already own them.
They own most of them, not all of them, and they're just protecting their position. So there's a dollar amount to that. There's a dollar amount to that. To the S&P, the ES. So whatever that dollar amount is, let's say the dollar amount to the contract is worth, I'll give you an example with the bond market since I know it. Each contract is worth $100,000.
Yeah.
So, if you need to protect $1 million of a position in your interest rates, let's say you have what the banks do. The banks bundle together a basket of mortgages. And so one person puts them all together. They have like $1 million. Let's say $1 million, but it's actually probably $1 billion. And so he would go to the bond market and lock in an interest rate by selling, 10 contracts if it's $1 million, if it's a basket of $1 million worth of loans, and he protects the interest rate that he gave out on that loan, the bundle of loans. So that's how you protect yourself in that situation.
Now, a question for you: these guys that are these basket programs or the big equity firms, when they hedge your position, do they hedge it in the ES, the SPY, the SPX? Where do they
Well,
hedge?
it all depends on your size, right?
Yeah.
The S&P 500 is a basket of 500 stocks. All right. They knocked it down, the value, to 250, so that we could trade, which is the mini contract.
Yeah.
Right, because it made it cheaper for us. Like each contract that trades, each tick in the mini is $12.50 versus $25. No, it's $12.50 versus $62.50 in the big. So it became like, of course, the exchange wanted more people to trade, so they made it cheaper for us to get in there and jump in and trade. It's the big institutions who are covering like $1 billion or $10 billion in their position, they're not going to want to trade 5 times as many mini S&Ps. They would rather trade 1,000 big S&Ps versus 5,000 minis. So it was just easier for them to trade. As we quickly come up here to, remember I said this is 88 area is a little bit more risky because of the action of previous, so that's turning out that way, so be careful. So it's just a matter of how big those institutions are that are protecting their position, and they don't want to trade 5,000 contracts. They want to trade 1,000 contracts.
Yeah,
it'd be easier for them to trade 1,000 contracts versus 5,000 contracts. That's all. All right, we got up to 89 and change here, 90 actually. Yeah, 89 and change, and then came off. So again, be careful if you're trading it. We're looking again. We missed it by a couple points before, so I canceled mine. Like again, I'm not. The levels are there, and I'm giving you what I'm doing. Doesn't mean that you have to do what I'm doing. It's just giving you what I'm seeing with the market. The settlement price would be up around the what is that?
19 and a quarter.
Yeah. So 19 and a quarter matches up with our 20 if we get back up there. Let me give you some levels here above in case they do decide to rotate. Right. So we got 09, then 20, then 29, and then 40. I just put a stop to this rally.
Yeah, well, almost 92. We ought to touch 92.
Yeah, almost 175. Yeah, I don't know why you got 92, but hey, there you go. Like I said,
92 was a target area.
Okay. All right. All right. So again, it's going to, so next week, just Monday, I should be back. I'll be back on Tuesday. And we'll see what happens there. So everybody have a great week. I'm just going to take off a little early today. Again, I'm not 100%, I'll be honest with you, I'm not 100% into it today, even though I would have liked to get my 88 earlier, but it didn't. Obviously, you heard 92 from Don. So if you traded the 92 area, then you did good. You got up to 91.75 there. So again, this is why everybody does their own thing here, right? You come up with your own levels and add them to mine. What we do in our education course will help you find those reasons why to trade those areas, and then you kind of go from there. Nice rotation there in the bond market. Obviously, consumer sentiment number was a little bit positive versus negativity. So next level on the upside we have is up at the even area, 39 even. Support right now would be right around the what is that, 70 area. We go back down there. and kind of in the middle. Just be a little bit cautious, patient, and everybody have a great weekend. And hopefully the numbers are working. So we had a good week, I think, and we'll talk to everybody later.
Take care.
Don, thanks, man.
No problem. See you next week.
Yeah, take care.